What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on natural gas prices.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we get there. And I will show you two ticker symbols. It is a BOIL, it is a leveraged ETF, Natgas futures and natural gas spot prices. Then I will continue with the fundamental news and I will show you what news might be the drivers of this price action. And at the end of this video, I will share my thoughts and my technical analysis and I will show you what should we expect next. So let's start with the price chart. I made my previous video right here at this point and I've told you that we broke this previous bottom and this means we invalidated this ABC correction. And we invalidated pretty much this movement to the upside as the motive wave because we have the breakout below the bottom of the initial movement. And this means we cannot rely on this movement as the next potential leg. Most likely we should see some hovering around these ranges for quite a decent period of time. And I also told you that because of this nature, or the BOIL is a leveraged ETF from natural gas futures and natural gas spot prices, we have to take a closer look on these ticker symbols as well. And right here, we still have an opportunity to see higher targets because we didn't break the $2 mark on natural gas futures. And let me show you natural gas spot prices. We had a pretty much triple or even quadruple bottom pattern. We hit $1.92 price point and we have this movement to the upside. So what should we expect next? I will show you in just several minutes and let me show you some news from the fundamental standpoint. We are on oilprice.com and this article was published on May the 8th and it says European natural gas prices continue to drop. And let me quote you the key bullets. The front-month futures at the TTF hub, the benchmark for Europe's gas trading, fell to $40 per megawatt hour on Monday. Benchmark European natural gas prices hit a 21-month low last week. Spot LNG prices for delivery into North Asia in June have also slumped. And this article is quite bearish in terms of its forecast. And I have to say that we have to be cautious with our positions because for now, the main driver for the prices of natural gas is the European purchases. And let me show you right here. On Bloomberg.com, we can see this article that was also published on May the 8th, basically yesterday, and it says, Europe's gas buying slows on expectations of further price crash. And the key bullets are following. Many buyers are currently in a wait-and-see mode, traders say. Some users expect a price crash to as low as €10, mid-group say. And let me quote you this. Natural gas purchases needed to refill Europe's storage sites are slower than usual for this time of year, despite a recent price drop which some buyers betting on a future slump. The containers benchmark futures have crashed to just a fraction of the recorded level since seen last summer, but that's not been enough to stimulate purchases with consumption slow to recover from crisis lows. Confidence that prices will continue to slide is leaving many buyers waiting to fill inventories ahead of next winter. And this is the reason why we have quite low volume during this movement to the upside that cannot confirm it as the potential beginning of new uptrend. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, first of all, let's take a look on BOIL ticker symbol, and right here, as you can see, we pretty much hit the range of resistance, and I can mark it like this because we have two bottoms and we can mark this range as the range of resistance. And because of this price action that hit it basically to the tick and had a small reaction to the downside, we have to see the further updates on the price. And if the price we'll go lower, and right now we are on pre-market hours, and as you can see we have first step to the downside on pre-market hours. This means this position, potential long position on oil, is still very risky, because we cannot confirm the movement to the upside despite its clear two-wave structure. Because if you compare the movement from the bottom in a motive wave, it should be first, second, probably the third, fourth and fifth wave. And if we compare it with the ABC correction that should unload this structure in the fourth wave, let me show you that we have to have a simple zigzag, and it is an ABC correction. And this shape is 100% identical. And we have two crucial points for this ticker, because if it breaks to the upside, if it breaks this the top of potential third wave, we might assume that it is the next fifth wave to the upside that should complete the entire structure, and this means most likely this is the bottom. And if it is the case, we have to wait again the simple retracement pattern to the downside that will unload this structure. And somewhere here we will be able to re-enter the long position with the tight stop loss slightly below previous bottom. And definitely it might be a very good case. Otherwise, if we will confirm the ABC correction to the upside, and if it breaks the bottom of this previous wave, we will eliminate the 5-wave structure and we will pretty much confirm the ABC correction. And this means from this top, probably on a bigger scale, we might have this is our first wave. And I don't like the structure of this wave, but still, this is the first wave, this is the retracement to the second one, this is the third one, fourth retracement, and we have to see one more leg to the downside. And from lower price points, we might see the movement to the upside that probably will be a medium-term bull trend. So, and let me show you right here that the most concerning part of this movement, despite of its quite high movement percentage-wise, 11.29%, we don't have confirmation of volume. This means we are not out of the woods, and that's why I highly recommend you not to enter your position even on the retracement, because we have to see the confirmation of volume to make a conclusion that this might be a motive wave, and right now we cannot tell it because of the volume. So let's switch to natural gas futures, and right here we are in my opinion it is the most bullish setup right now for three of these tickers, because we have quite comparable volume with the previous one. We didn't break with this bottom, these several bottoms that were set on March 29th, April the 6th, and definitely this is the lowest point of April 14th. And this means from this bottom we still have an opportunity to hit higher targets. And if it is the case, we can pull the Fibonacci retracement tool, and I've told you that probably we might use this stop as the crucial pivot point, or this one, which is often used by the algorithms. But none of these levels can give us a proper levels of support, because we broke all of them. Even 0.786 was broken right here, and this means the probability to see the motive wave, if it breaks the 0.786 Fibonacci retracement level, is quite low. That's why I highly recommend you to wait for the more favorable conditions, and I highly recommend you not to be in a hurry to enter your long position. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys until next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up on the attack.